Hello. It's market roundup time. Joe with you here. Let's get into the 22nd of January. It's a Wednesday. You guys know how this works. Let's get through some of the meaningful news of the day. Let's see what happened technically, because we did actually kind of confirm a bullish trend. And then I've got some trades to share, so let's do it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, we can see we just kind of continued with the bullishness we saw coming out of the gate after a holiday, inauguration, all that stuff. These markets were actually poised to do so. Let's get to basically what's going on. The daily news, another push higher in the markets. Earnings results is kind of a driver. I'm starting to see some good things on some of these companies as they're coming out. We're in the midst of earnings. We've got some financial companies that have done good, some technical companies that have done good. So we'll see if that continues. And then we approach some key levels in the markets overall. So we got to get back to the basics. We got to get back to charting. Rob Main mentioned this yesterday. We needed to see a couple of key levels broken. I believe we did get that yesterday. And kind of a lot of more of a fall through today. So how do we finish overall? A little bit of a hesitation considering we did gap up. The Dow up 0.3%, the S&P 0.61%. The Q's the biggest winner today, 1.28%. That has a lot to do with Netflix. Netflix had some really good numbers and jumped higher, and it carried some other things up like Microsoft, Nvidia, Amazon, stuff like that. The Russells, however, did slide. I thought that was interesting. I am seeing some specific buying and selling throughout all sectors. I'll bring that back up here in a second. Oil down just a little bit and gold up 0.28%. So let's get straight into our advanced decline line. Now, this is what's interesting. When we finished up overall, folks, but take a look at this. The majority were declining versus advancing. So I would imagine this would have been a little bit of a hesitation day after the last couple of days of pushing higher or breaking out, especially in the S&P. But if it wasn't for these larger names, Microsoft, Nvidia, Netflix, not everything was advancing. The majority, slightly over the majority, was declining. But 50-50 on the above-below moving average. This was higher. First time we've seen it higher, actually yesterday. So we're still trying to figure ourselves out. I talked to a lot of traders, and we refer to this as the January effect. We have a brand new president. We have a brand new outlook when it comes to all sorts of different policies that could be changing. And we have a whole bunch of opinions out there. So we got to let this kind of play itself out before we can do anything longer term. But what we can do is focus on the overall trend. So let's just jump straight into it. Now, I've discussed this a few times, specifically with the FX side. I've had a chance to discuss it with the equity side as well. And when you take a look at this, it's descending, right? We've got lower highs here. Kind of lower lows, but the overall pattern that I drew with the first two lines is a flag pattern. This is a bullish flag pattern. We came from a very strong move to the upside, an aggressive crossover. Let me dump some of those lines. Hold on, folks. Let me get my line back up. An aggressive crossover on the 2050 that came very quick. That 20 slid very fast, very quickly, but we found support levels somewhere in the overall trend. Now, I would expect something around this area. I know I discussed this quite a bit, but it decided to go a little bit lower. But the flag pattern itself, well, let me just go ahead and draw it one more time. The flag pattern itself is a slow play. It is a slow descending pattern, lower highs, lower lows, but never really goes anywhere. And then this is the subsequent breakout. Remember, Rob talked about, hey, I just want to see one more day before I can actually go bullish. Well, we got it. Now, the volume wasn't super exciting. It wasn't anything to, write home about. However, it was a lack of a lack of selling. The anticipation of strength moving forward. And we're seeing a lot of movement in and out of specific stocks through all sectors. This can be maddening when you're trying to play overall weakness and overall strength. However, if you can find a stock that's moving higher or a stock that's moving lower, they tend to stay there. for a little bit. Now we are getting into earnings, so let's keep that in mind as well. Let's jump straight over to the Qs here, and you can see the Qs are doing pretty much the exact same thing. I imagine this will catch up. The S&P has been actually leading quite a bit, and if you take a look at the diamonds or the Dow itself, it's still lagging, but it is showing signs of strength. So they're back up above resistance levels. This is that same flag pattern here, folks. We're pushing higher. I imagine we start threatening these highs over the next week or so. Now, that has a lot to do with what earnings results are moving forward. But so far, a lot of these companies are posting some pretty good outlooks and some pretty good numbers. So we'll see if that continues. What I'd like to see, folks, is a little bit more divergence into sectors. I want to see a sector that fails or a sector that does well. Right now, I'm just not getting that. So let's take a look at the overall heat map. Now, to let you guys know that, hey, to tell you that the NASDAQ is up almost, over 1%, the Dow's up over 1/4, and the S&P is up over 0.5%, and you took a look at this heat map, you'd probably say, well, geez, Joe, you're kind of up in the night because, the majority of this is not very good. I mean, take a look at kind of this area over here, real estate, utilities, energy, the majority of healthcare. Financials have been super strong, individual stocks have, but overall you can see not so good today. Remember, over 50% of the stocks were down today versus up. But when you take a look at these big boys, it's enough to, I don't want to say, well, it's enough to kind of mask what's really going on because they have such a huge impact on things day to day. Here's the big one right through here. I'll highlight it twice. Netflix, this is at earnings, over 10%. It looks like a smaller piece compared to Microsoft or Apple, but it does impact the markets quite a bit. So overall, it's good. But it's more of a hesitation day to me than it is something that's going to emerge and continue to really threaten those highs. Not to say we're not going to, because especially if we continue to get some good earnings, I don't see that being a problem. That chart is just super strong. So where am I at? Well, here's our market outlook. I got a +1, a +2 for the monthly outlook. I would love to say +3 on the monthly outlook. I just said, hey, we surged up there. We're hitting our head on a ceiling. You guys can see it. Let me get my line up here. And I'm not afraid of it. I've just traded the markets enough to know there's gonna be some sort of hesitation here, some sort of corrective action or consolidation, or maybe one more day up and then some corrective action. So this weekly outlook is literally just cautious because our top bottom below, these shouldn't say below. Sorry, folks, they should say above, and the slope has actually turned. You can see that this 50 is actually turned above or turned upwards as it should be with the 20. So green, and green is definitely a +2, +3. However, my weekly outlook stays cautious because of the extension this had to get there. I'm expecting some sort of hesitation or or a pullback. It doesn't mean I'm going to go bearish. It just means if I've got a couple of bull trades that I want to put on, I might wait for a second, wait for them to consolidate or pull back. But overall, this is strong. Please do not try to short this. Don't try to fade it. Let it play itself out. Like Rob mentioned yesterday, it is confirmed and it is surging. Let's let it go and see where we go from here. Lots of potential trades out there. Rob gave you a huge list. I came across the majority of the same ones he had, so I decided to add ones that were redundant. These are a couple that I found today. TSM, I like that one a lot. Now, this is Taiwan Semiconductor and Marvel Technologies. Remember, folks, these were good trades. These were good stocks. They're starting to come back. They're starting to reemerge. So I liked both of those. AL is a financial company, and Amazon is looking like it wants to do another high base. Now, on the other side, and this is where I'm finding that back and forth, this is Siri. Communications is a very strong sector, but Siri's is not making it. And then the consumer staples. We've recently separated the consumer cyclical versus the staples, and I'm glad we did because we got Conagra Brands, Campbell's, Heinz, right, KHC, Chipotle. They're just not making it, but there are some that are. Another thing that I thought was interesting was some the casinos, Las Vegas Sands, MGM. Penn Gaming's okay, but we're seeing some weakness there, which is interesting because on the flip side of that, we've got travel up, American Airlines, some of those look pretty good. So lots of diversification when it comes to, hey, communications is super strong. It's not. Series in there. There's a bunch of different stocks you can find in there that are actually really being punished. Then on the other side, hey, consumer cyclical is just getting smashed. It's actually not. There's some that are actually doing really well. So it's really tough for me to blanket an underperforming and outperforming sector because we're still in the mix of that, I want to call it a January effect / inauguration effect, where things are just trying to play themselves out and kind of find where they're going to go. So let's not try to overthink it. Let me jump straight into Taiwan Semiconductor. Now, guys, this one's been strong. It's been strong for a while. It's got an opportunity here. I just like the ascending triangle pattern. It's just kind of following along with what the Qs are doing. A little bit of a push to the upside. Not a lot in the volume, but it did have its earnings. Now, check this out, folks. This earnings is red. I checked it out. It was a surprise to the downside. They actually missed a little bit, but they still gapped up, turned down, and then they're moving higher. So it doesn't seem like the majority of who's buying this right now cares about that small miss. And it was a small miss. It wasn't make or break. They just were under the number a little bit. Turns out that doesn't matter. So if you're just trying to play it outside of that, a nice ascending triangle breakout. Let's go over to the bear side. There are some sideways out there, guys, but I don't think sideways is going to stay there very long. I'm a little skeptical with them. You guys have heard me tout that quite a bit, but when it gets there, I'll be happy to do it. I love the pattern in Siri. It's the majority of this is the pattern. It was interesting to find such a strong sector with a few bearish stocks. There were a lot that looked just like this, but for some reason, I decided just to kind of land on Siri. I think I liked it because it kind of correlates with previous resistance, which was support back in October. A little bit of anemia here when it comes to a double top, breaking support. So a no-brainer for me. I'm actually going to see if I can't get in this tomorrow. My first target's going to be somewhere down around the $20.50 area. So, a couple of bucks. I'm not looking for much. Maybe a week and a half out. We'll see. But I just, if it's underperforming, it's doing it for a reason. I don't try to overthink things, folks. I just chart. That's all we got. So that's kind of where I'm at. So earnings should be the main driver over the next week or so. I really want to see things celebrated or punished based on their numbers. I want to see where the money goes. I'd like to see an emerging sector, one sector that's doing really bad or doing good. Right now, they're kind of all over the place. I mean, I'm seeing weakness in everything and strength in everything. So it's kind of difficult to find one that's, ahead or behind the other. So bullish sentiment in the markets, technically, I have to really reiterate what Rob said yesterday. It's a flag pattern in the longer term, folks. It broke above resistance. It's a breakout. Let it play itself out. It's moving higher. I think as far as the technicals go and what's going on with the earnings announcements and economically, we don't have a real reason to fall apart here. So bullish sentiment in the market. If you don't like it, that's okay. You can kind of sit out, wait for things to play things out, correct? That's fine. Still seeing very, very selective selling and buying across all sectors. So until I see a little bit more consistency across those, I can't really have one sector ahead or behind the other. Jobless claims, existing home sales, consumer sentiment, services, manufacturing, PMI. That's all that's going on. So tomorrow's just the jobless claims. Then we have existing home sales and the other few there on Friday. I don't think it's going to make too big of an impact on what has happened lately and the expectations of what the markets are projecting can happen. So until we get another Fed speech or to an area of another CPI or a PCE number, I don't think that's going to have too much of an impact, especially when we're in the midst of earnings season. A couple going on, Texas Instruments. We got Union Pacific and American Airlines, I believe. And then Alcoa's out. I think I can't tell right now. Right now, Alcoa is it's up about 2%. It was as high as almost 5%. It's down a little bit. I'm not sure if their numbers are out yet. So just make sure you're aware of what's out there. And more importantly, the impact it has on the overall markets and your outlook for your positioning. All right, guys, that's all I got for today. Thank you so much for joining me. We'll talk to you next time. Bye, everybody.